जनरेशन की पसंद।
Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are passing in trade. I'm Darshan Mehta. Let's welcome our experts then. Sangeet, Lakkar of Newberry Capital and independent investment advisor Vivek Mavani join us on the show. Thank you to both for joining me on the show. Today on Hot Money, we'll discuss Axis Bank. Came out with its numbers, but somehow, like the GDR moved up 8%, this counter didn't manage to move up as much. Sun TV came out with a mixed set of numbers, but rather disappointing as far as the stock price is concerned. HCC over the past few days has been rallying. Whether the rally will continue or does it make sense to invest in certain of these stocks in the infrastructure space, we'll ask our guest. And obviously it's Diwali, so we'll ask our guest which one is one stock they believe could be a potential Diwali pick. So we'll start off with Axis Bank first. Vivek, I'll start with you. What did you make of the numbers? What's the way ahead for Axis Bank? It's come off the highs of the day, but what's the view?
Axis Bank, certainly at least the recent results were refreshing and a positive surprise after almost, I would sense, 10 to 12 quarters of negative surprises in terms of either slippages or on the basically broad performance parameters, largely to do with bad loans. Now, latest quarter, net interest margins were maintained, a very sharp control on slippages and the growth in terms of loan book, both on the corporate and non-corporate, seem to be looking up. So a lot of market participants seem to be making a case that the worst is actually now over and it's a change of a trend. I differ on that one quarter of numbers in terms of control on NPAs or a little of growth acceleration does not really make a new trend as yet. I mean, I would hope to be optimistic. I would hope and be optimistic, but I don't think I'm really convinced on that so far. This also coincidentally was the last quarter for Shikha Sharma to be declaring the results, and Amitabh Chaudhary, ex-HDFC Standard Life MD, takes over from first week of January. Informally, maybe he takes over from 16th November as been announced. So I would wait till the December quarter results to be announced in January, or more so March quarter results being announced in sometime in April or May. Typically, whenever there is change of guard at the top, a new MD or CEO in any bank, whether it's a PSU bank, whether it's a private bank, I mean, empirical evidence seems to suggest that there's one last bit, hopefully one last bit of cleanup in the books that is undertaken, and I would hope and that Amitabh Chaudhary would also do that, number one. Number two, RBI, Axis Bank, in case of RBI's audit over the last couple of years, there have been some serious divergences. I mean, just the way Yes Bank also had. But RBI really has not enforced the taking of the write-offs because of those divergences. And if I remember the numbers correctly, it was 6,800 crores last year. That is for the year March 17. March 18 RBI audit, I don't think is the numbers are yet out if there are divergences. But in terms of what really happens about those divergences, whether RBI would force them to take those write-offs as well, one has to wait and see what really happens. So I'm not too much excited about it, and I wouldn't call it a change of trend as yet. In any case, from a valuation perspective, at about 3 times price to book, price to adjusted book, based on what has been reported so far, and maybe about 2.6, 2.7 times 1 year forward, it's not particularly cheap. So I mean, there's no hurry to go out and buy Axis Bank. One can very well wait for another 1 or 2 quarters and see how it pans out.
Okay, Sangeet, do you agree the worst is not over for Axis Bank, or do you believe that the worst is over?
So I agree partially with Vivek that 1 quarter results is too short a period to judge the change in trend of a bank. Also, Shikha Sharma's last quarter, so you could expect, results, she might be, I mean, there could be some positive results being reported, and the next quarter with the change in management, you could have some more additional write-off as a matter of caution. However, on a larger note, if you see with the rising interest rate scenario, all the private sector CASA funded banks are likely to gain, and Axis Bank has about 48% of its deposits in CASA, which is a big positive. Their also cost of funds is amongst the lowest with about 5.3%. So, and you could see the little impact on the net interest margin being reported higher because their cost of funds being lower. So I am by and large positive on Axis Bank. There is also another trigger with Bain Capital checking in. I think all the past governance issues and whatever questionable governance practices which were being talked about should be put in place. So I remain positive on Axis Bank at the current price.
Okay, so that's the view that's coming in. I think we got contradictory views coming in on Axis Bank. Vivek is still cautious on the bank, while Sangeet is rather positive on Axis Bank. Let's move on to the next stock, and that is Sun TV. The counter is down in trade. Numbers not the best of numbers. It's down almost 6% now. How do you analyze the numbers? What's the way for Sun TV? And it's fallen off a cliff. It was trading. It's lost almost more than 30% from the all-time high. So what's the view ahead for Sun TV? Is there more traction that is there? We'll ask our guest. So Sangeet, Sun TV, do you like the counter at these levels now?
No, I don't like. So I believe there are two serious structural challenges which Sun TV is facing.
Okay.
One is they always used to enjoy more than 50% market share in the South markets. However, over last 18 months or so, if you see, their first time their share has reduced below 50%, largely because of their two competitors, Zee Tamil and Star Vijay. Each have garnered about 20% each. If you see if you have been reading more about Sun TV's content and all, there's fairly outdated content. They have to revamp the content. That's the message which the competition is giving. Also, they have been fairly late entrant into the OTT business, which whereas Zee and other even foreign players, I think that's going to be a disruptive segment in coming times. There are also talks about the promoters being very close to a political family, and if you see the promoter's salary being at about 176 crores, which is kind of unheard of in the other companies, in the listed companies, if you compare it to their financial performance. All these negative, I hardly see a tailwind for a company going forward.
Okay, so that's the view that's coming in, and OTT is something that they believe that what others have done, and they are late in the entrant and they won't be able to catch up.
Yes.
Okay, what's your view on Sun TV? Do you find it attractive at these levels? It's always traded at a discount to Zee, but overall it's fallen another 20-30%. What's your view?
Two, three points. Firstly, I don't track it in too much detail for the simple reason I generally avoid companies and stocks which have promoters connected politically, and here they are a political family. They are the first political family in Tamil Nadu, where Sangeet mentioned connected to a political family. Well, the brother of Kalanithy Maran was a minister in the previous UPA government. He was a telecom minister. So obviously the family is a political family. So I avoid companies, managements who have political background, because you don't really know whether, what really is happening, whether the business is standing on its own feet, or whether it is the political tailwinds which ensure that the business runs. That's number one. Number two, on a non-political side, the amount of disruption happening in the media business in terms of traditionally the companies which generated their own content, the view was that with technology, probably their opportunities to encash that content in terms of additional platforms, additional you could say distribution channels and so on and so forth, whether it's online, whether it's through the cable network, or whether it's the mobile, or so on and so forth. But there really, so far we have noticed that there really has been no business model which is able to encash as effectively as your television, and television perhaps is losing a share of both mind and eyeballs. Let's look at ourselves. The amount of time that we used to spend in front of TV screens 5 years ago versus today, probably mobiles and iPads probably take away a serious share out of that in terms of our viewing, and probably that applies for probably another 500 million people outside as well. So I'm not really positive on Sun TV for both these reasons, for both the business reasons as well as the non-business reasons about the political connect. So I would at this point of time reserve my comment, but nevertheless to say that I'm really not positive about the business or the company.
Okay, so that's the view that's coming in on Sun TV, not the best views coming in. Now the next stock we want to talk about is a stock which pretty much trading near its low. There was a rally in, and HCC is used basically as an example, but there was a rally in some of the counters, be it the ADAG group, be it Suzlon's. So some of these counters which have been beaten black and blue are actually reversing over the past few days. Will the rally continue, or should you totally avoid counters like HCC and the whole host of counters pretty much which have been extremely high beta? So Vivek, I'll come to you. HCC as first one of the stocks, but that's basically an example to point out certain stocks like your Suzlon's, your Infibeams, your PC Jewelers, which have managed to rally. Would you venture into any of these companies, especially HCC on that?
Absolutely not. In fact, I would use this platform to actually say that it makes no sense to trade or invest in companies which have become penny stocks, whose business is not just fractured, but the business model is broken. Their balance sheet is broken beyond repair unless there is a white knight who infuses not just few thousand crores, but few 10,000 crores of equity and cleans up the business and the balance sheet. I mean, till then, nothing really can happen. You rightly compared it to a Suzlon or a Arcom or maybe several other examples. Second thing, it actually requires some skill to trade penny stocks. The stock, of course, from the low levels of 9-10 rupees has rallied almost 30% in the last few weeks. And there's a whole, I would say, class of market participants who seem to love trading in penny stocks and make a business out of it. But I think majority of them just burn their hands because these stocks only hit new lows. They make lower tops, lower bottoms, because even in the journey to possibly go to zero and into non-existence, there will be occasional rallies from time to time, and which is what we probably are seeing in HCC, a rally from 9-10 rupees to almost 13 rupees. Probably the next time it falls, it will go well below 9 and who knows what. As far as the business is concerned, it clearly is broken. Just too much of weight on the balance sheet in terms of liabilities to be serviced. No money to really take on new projects or new business, and the existing business has got nothing profitable in that. Even the existing business can't sustain. There was one ray of hope a couple of years ago in terms of value unlocking and encashing of the Lavasa by way of an IPO or some sort of strategic sale which was being looked at, but I think even now that is on the back burner, and I don't think anybody is now interested in Lavasa either. Wonder of wonders is even tourists are not interested in going to Lavasa. I mean, you ask anybody, does anybody go there? I don't think so. So it's a deserted place which really has got no value from even a real estate point of view. So I would not just avoid it. I think one has to avoid it with stay away from it from like a barge pole.
Okay, what about you? HCC or the other stocks also? Be it will be a JP, Suzlon, that category of stocks.
So again, it's a complete avoid, I believe. I don't personally understand the trading mentality, especially on the penny stocks. So I'm possibly not the right person to even advise trading on a penny stock. Talking specific to HCC, I think the equity value, I believe, is close to zero. I mean, the company is hardly able to generate cash flows which are able to service its debt, even its interest obligations. So forget about the debt repayment which they have to do. Again, Lavasa, it's being admitted to NCLT, so that ray of hope, as Vivek mentioned, is gone. They've already taken a write-off of about 1,500 to 2,000 crores in the current quarter. The promoter's shareholding is about 85% pledge, so you would expect always, those shares. I don't rule out the possibility of those shares coming into the market sooner or later. They just won about 2 orders in the last quarter. About 19,000 crores order book is marred with all kinds of litigation and execution delays. About 27% of their order book, I believe, is coming from Jammu and Kashmir, where execution challenges remain. So it's a complete avoid for me. I mean, I don't see any ray of hope in coming times for HCC as a company.
Okay, and the final stock that we want to talk about is pretty much the Diwali pick. We start off into Diwali week and we're asking our guest which is one stock they believe could be accumulated and held in the portfolio. Sangeet, I'll start with you. What's the Diwali pick?
So again, I have chosen Sangvi Movers. It's again a small cap company, and incidentally we had spoken about it about 6 months back when the price was ruling at about 160 or so. Right now the price is about 115. Though my conviction remains in the counter, more so with the recent results by the capital goods companies like L&T and ABB and all. So this company is into crane rental services in India. It's perhaps one of the world's largest when it comes to above 100 meters crane, and they have about 70% market share in India. The order book about a couple of years back was 80% coming from the wind energy installations. However, there was a disruption in that segment wherein the government changed the regime from the feed-in tariff to the auction-based regime. So accordingly, the company was hit as well. Even the last quarter results, if you see, they reported about 20 crores net loss. But there is a heavy depreciation charge to the business, being a heavy fixed assets company. So still the company generated about 13 crores cash. The valuation right now the market is giving is, subscribing as if the company has gone bankrupt. But I don't think that's the case. It's a very cyclical industry. It's not a long-term hold, as I say. But they are working with L&T on all their verticals in the domestic capex. L&T reported 85% new order inflows in the last quarter. I think it's going to, once the numbers show up in the second half, I think the price will automatically reflect the value of the business.
Okay, Sangvi Movers, it's corrected a lot from where Sangeet had recommended, but he still remains bullish on the fundamentals of the company. And Vivek, which stock are you speaking about?
Yeah, so for me it's KEI Industries. I've spoken about it earlier also a few months ago, but now the stock has corrected almost 25-30% from the top. It had corrected 40%, and but just the excellent results last week led to a rally from the low levels by almost about 15-20%. So basically the story in KEI is about consistent and sustainable growth on excellent strategy and execution from what it was high tension transmission cables 10 years ago, largely as far as the business moved from B2B to B2C to get into low tension cables as well as house wires where the margins are relatively higher, as well as diversify or forward integrate into EPC projects in the power sector. So today the projects business is almost 20-22% of the top line. Timely expansion or I would say modular expansion marginally every year to sustain the growth, which has been in the vicinity of about 10-12% volume growth, resulting in about 15% revenue growth over the last about 5 to 7 years. And what we have seen as a result is expansion of margins, strong cash flows, and return on capital, return on equity upwards of 20%. I mean, in fact, the latest, if you look at September, the four quarters, return on equity is almost 23% and likely to sustain. Strong cash flows are such that in spite of capital expenditure every year that they have been doing to expand capacity, they in the next 2 years they would probably be able to repay all the term debt, and the only debt which will remain will be working capital, and that also at some point of time will be capped because the consumer or the low tension and the house wires business, the working capital intensity is much lower, and as that part of the business grows over a period of time, working capital intensity also would fall from current about 4 months to perhaps about 2.5-3 months in the next 2 years or so. The latest quarter results had a 33% top line growth driven by almost 50% growth in the low tension and house wires business, slight margin expansion which will also continue. So what we will see over the next 3-4 years, maybe in about 4 years time, is doubling of top line, about 19-20% growth in top line, and about 20% or maybe about closer to 25% earnings growth. Valuation wise, it's trading at just about 9 times EV by EBITDA current year, about 13-14 times earnings for the current year, and 1 year forward, if I look at financial year 19-20, it's trading at about 7 times EV by EBITDA and about 9 times earnings, which I think is quite cheap. It's at cyclical low. If we look at 10 years what this company has, or 15 years what the company has traded on the valuation parameter, and the company is much stronger now than any time in the last 15 years. So I'm quite positive on that, and I would be a buyer on declines as far as this company is concerned.
Okay, so those are the two stocks that's been spoken about, Sangvi Movers and KEI Industries. But with that, we're completely timed out on today's Hot Money. Vivek, thank you so much for coming in. Sangeet, thank you so much for coming in. Ask BQ comes up next. Stay tuned to Bloomberg Quint.